Have you been thinking about raising money from investors? And you hear all these different things about different kinds of investors, like you hear about VCs, you hear about angels, and you're like, what are VCs? What are angels? What's the difference between them? In this video, I'm going to talk about what are angels, what are VCs, what is the difference between them, and which should you raise from? I'm Jenny Kassan. I'm an attorney and capital raising coach, and I'm excited to share with you how to raise money for your business. Everything I talk about is all about how to get really comfortable with the idea of raising money from your business in a way that's totally true to what's important to you and how you want to grow your business and make sure you can raise money on your own terms. So what are VCs? What are venture capitalists? So venture capitalists is a very specific type of investor. What it is a group of people get together, they're the venture capitalists, and they raise money from investors. And the investors are looking to the venture capitalists to invest their money and make sure that that money ends up giving them a very high return. And so what the venture capitalists will do is they'll raise money from these investors, who are sometimes called LPs or limited partners, and they'll promise them, yeah, we're going to raise money from you and we're going to invest it in these really cool high growth tech startups, and we're going to make you really great money on your investment. And usually the investment fund lasts 10 years. So it's a closed-end fund, and the investors are expecting to make their big return at the end of that 10 years. And so what they're looking for is a company that can grow at least 10 times as big as it is when they invest. So they're looking for investments in very high growth companies. And they're kind of making bets. They're looking for a company that can really grow fast, and they understand that they're not sure what's going to happen. So they kind of accept that a huge majority of the companies they invest in are not going to grow as fast as what they're hoping.
10 years later.
And so what they're really hoping for is that maybe at least 1 out of 10 will just be that huge success story where they will, the company will have a big exit event, which means they get sold to a larger company at a big increase in valuation. And that's how VCs make their money. Now, most businesses are a terrible fit for this type of money. Very, very few businesses raise money this way. You have to be a very particular type of business that has that plan to grow very, very fast, which generally means you're going to have some kind of technology product. If you have a business that's more service oriented, or maybe even like you have a tech company, but you don't want to grow super, super fast and then get sold to another company as quickly as possible, it's not going to be a good fit for you. And that's okay, because very, very few companies raise money from venture capitalists. So if that's not who you are, don't feel bad. Venture capital is definitely not the only source of funding. Also, as you may have heard, if you happen to be a woman or a person of color, getting investment from that source is very rare. Only 2% of the venture capital money in 2021 went to women-run businesses. So that sucks, but the good news is there's plenty of other sources of funding, and maybe you don't want that venture capital money anyway, because it does come with a lot of strings attached. They're going to push you as hard as they can to grow as fast as you can at just about any cost. They may ask you to sacrifice your values. They may ask you to change things that you love about your company. They may ask you to fire team members that you love. And so you hear many, many horror stories about businesses that do raise money that way, and they do expect to really get some control over your company. So that's what a venture capital is. So what is an angel investor? And this is a more complicated question because there's many different ways to think about what an angel investor is. So generally speaking, an angel investor is different from venture capital because they're investing their own money. Venture capitalists are investing other people's money, and so they really have to have this high growth strategy to return, to meet their investors' expectations. An angel investor has way more flexibility because they're investing their own money. So that's a great thing. That means that you might find an angel investor who's a perfect fit for you, that doesn't have that pressure of those limited partners pushing them to reach a certain capital raising, a certain return on the investment. The hard thing, though, is that people who call themselves angel investors if you search for angel investors or angel groups in your city, a lot of those angel investors, I would say almost all of them, are part of the venture capital ecosystem. So if you're raising money from angel investors, what I call like professional angel investors or active angel investors, chances are you're going to be subjected to the exact same pressures and expectations that you would be if you were raising money from venture capital. And that if you don't want venture capital, then you don't want angels that are going to be in that same mode of thinking and with the same expectations. The good news, though, is that most people who have money to invest are not active angel investors. They're not part of an angel group. They're not part of that venture capital ecosystem. It's really a very small percentage of people who have money to invest that get involved in that angel investing world. But that doesn't mean that those people cannot become investors for you. So I like to define angel investor more broadly than just those people that are involved in active angel groups, and include everyone who has money to invest. And to get a little bit technical, we might say that an angel investor is someone who meets the definition of an accredited investor. And this is under federal securities law, someone who has at least $1 million in net worth or $200,000 in annual income. And so that's considered an accredited investor. And so those folks under the law have more flexibility in places that they can put their money. But the good news is that most of those folks are not actively involved in angel groups where they've been brainwashed to think that the venture capital model is the only way to invest. So I would say you should probably raise money from angel investors, but think about what type of angel. You may not want to go after those angel groups in your town, in your city, because that really is almost the same thing as going after venture capital money. And if venture capital is not a good fit for you, you're not going to really have great success with those angel groups. But go for those like 95% of accredited investors who are not active angels and talk to them about investing. They're going to be a lot more open-minded and flexible about supporting your business. So let me know in the comments below if you have ever talked to any of angel investors and what you heard from them. Did you ever pitch to an angel group? I would love to hear about your experience with angel investors and if what I'm saying is something similar to what you've experienced yourself. And also feel free to put any questions in the comment section below. If you'd like to see more videos about how to raise money from investors, here's one video you can check out. And then this whole playlist is also really helpful. All right, thank you so much. Have a great day.